We're going to continue talking a little bit more about Janet Yellen's led Treasury Department and what she'd mean for America's biggest banks. For that, we want to bring in Mike Mayo. He's the senior banking analyst at Wells Fargo, a bank, by the way, that she has arguably been quite tough about on her way out of the Fed. What is your take of whether bank CEOs are cheering or jeering this morning?
I think this is good news to have Janet Yellen as Treasury Secretary. To me, she transcends politics. She's not pro-bank or anti-bank. She's pro, economic growth. She's pro-employment. She's pro a thriving economy. That will be her scorecard. And she checks three main boxes. It kind of shows, to quote Abe Lincoln, don't swap horses midstream. And this is no time to change policies dramatically. So the three boxes, number one, economic recovery. She is an economic recovery specialist. Number two, in terms of speaking the language of the Federal Reserve, Treasury will have to still work with the Fed during these still sobering times. And number three, she is a known commodity to Wall Street. We collectively know her, and this is not a time for big changes. So she's not a pushover, but we do see her as having a more consensus-building approach, a more measured approach. When she was at the Fed last decade, that's when you had more risk-based capital programs for banks. That's nothing easy about that. But those programs worked, and that's a key reason banks have some of the greatest resiliency than encountering any recession in modern history. So
Mike,
I think
let's just talk about from a regulatory perspective on the banks. How do you think she's going to approach it? And do you think that she's going to do anything that would be arguably tougher, frankly, than this last administration?
Well, pull the lens back. Bank stocks under the last administration have had their worst performance versus the stock market as a whole in modern history. So this idea that Republican presidents are good for bank stockholders and Democratic presidents are bad is just not the case over the last at least 40 years. Banks performed very well under President Obama and President Clinton, and they performed poorly under President Bush and President Trump. So I think economics trumps politics. Now, look, there's likely to be some tweaking, but the major regulation in force right now is Dodd-Frank, which was passed when President Obama was at the helm. And frankly, it did its job. I mean, banks have twice as much capital, a lot more liquidity. And this time around, banks are part of the solution and not part of the problem as they were during the global financial crisis, or I would say actually were the problem.
Mike, what about taxes? I know that's a little bit off of your beat per se, but we were talking to Senator Stabenow just a little bit earlier, and Vice President Biden, now President-elect Biden, has said that he plans to raise taxes not just on those who make more than $400,000 on an individual basis, but importantly says that he wants to raise taxes on corporations. As she tries to balance a recovery at a time when we're still looking for stimulus, how do you think she's going to think about that and perhaps advise the president-elect?
Well, look, she inherits if she gets the job, she will inherit a very tricky and difficult situation between dealing with the Federal Reserve, encouraging more fiscal response and stimulus. That's no easy task by any means. But when it comes to the banks, the biggest tax, and I would say this tax is 3 times greater than any proposed increase in the corporate income tax. The biggest tax is the flat yield curve and low interest rates as the Fed took its balance sheet from $4 trillion to $7 trillion. That cost banks $50 billion a year in annualized earnings as of the third quarter. So to the extent that we get to a more normal economy after the war on COVID is won, the reversal of that rate environment, the reversal of the decline in the net interest margin, and eventually the reversal in the terrible loan growth trends, that will overwhelm the impact of a potentially higher corporate income tax.
Shepard Smith here. Thanks for watching CNBC on YouTube.